What's going on, good people? Welcome back to another episode of the Trading Challenge. Today is part two for day number 17, May the 2nd, 2023. We made some trades today, so let's get into it. So this is the afternoon session that I traded after I got done with the morning session. So let's talk about trade 6 through 20. So on trade 6, 7, and 8, I was looking to short the top of the zone up here, but I was a little bit, I wouldn't say early on these trades. I got in at the right price, but I just wasn't really willing to accept the risk at that time because a lot of times I want to see that trade work in my favor immediately, and if it doesn't, I'll cut it. So maybe I would say on this trio of trades, I should have just taken one attempt rather than two attempts up here, and that would have actually allowed me to make more profits on trade 8 when I was actually able to catch the trade from the top of the zone to the bottom. So going forward, I want to focus on just testing out my trades one time, not two times like 6 and 7, just once. So then we move on, we see the market continue higher, and then we come back to retest what used to be a level of resistance that we have a zone drawn on. Now this level up here is important because this is one of those scenarios where we have a zone on top of another zone. So it's not all too uncommon. You see that actually pretty often in the market where it'll be a zone and then it'll break out to a higher zone and trade within those two zones. So this is what we see going on right here. So at trades 9 and 10, I shorted after I saw this lower high at point A. So I was thinking that we came up, we made a swing high up here at the top of the zone. We pulled down, created a lower high. So I expected prices to move lower pretty soon. So that was my idea on trade 9, but I was wrong on trade 9, which was fine because I'm looking at trade 9 and trying to find a reason to say that I shouldn't have taken that trade, but I saw a lower high and then I looked for a continuation after that. So to me, that's a fair trade. You know, sometimes that's just a loss you have to take. So 9 is an acceptable loss. But 10, I think that 10 is just a little bit unnecessary because if 9 didn't work, I don't have to come back and do the same thing that didn't work on the very next trade. Kind of building on the lessons that I learned from 6 and 8, 6, 7, and 8. Really, we just want to focus on if we're wrong, just be wrong once. You don't have to be wrong twice in a row back to back. You know, that just eats into your profits later down the line. So after trades 9 and 10, we see prices come back up, retest the top of the zone right here, push out. They had a false breakout and came back into the zone. Now I dropped the ball right here. I should have been long right here as soon as prices re-entered the zone, but I wasn't really quite sure if that zone would hold up or not, but it clearly did. So look at where I actually went long. I entered the trend at 11, which was at the top of this swing high, and if we go back and read the notes, it says I went long at the top of the swing. That's a low probability trade, you know, and that's always the case. Whenever you're shorting at higher prices, it's just low probability. There are situations where I look to go long at higher prices, but those are only when we're in clearly trending markets where the trend is clearly defined in one direction and there are no major resistance points above. This scenario did not qualify for that because we had major resistance up here at 790. If I was to scroll over to the left, we would be able to see that. So that was on me right there. Just I saw that big candle right here and I just thought that prices were finally gonna start trending for the day like they have been doing for the past week and a half, but that was not the case. You know, you have to trade what's in front of you, not what you want to be in front of you. So that's the lesson right there from trade 11 and trade 12, because that's the same scenario as 9 and 10 as well as 6 and 7. I was wrong initially on the first one and then I doubled down again. That's just not a recipe for success. Now 12A, I had the right idea. Short as prices broke back down through the midpoint of the zone and then hold my short all the way down to the bottom of the zone. My exit was good. My entry was not my best because I should be shorting once prices break back into the zone. Take a note of how I shorted kind of towards the middle of the zone rather than at the midpoint. So that's execution flaws on me. You know, I hesitated a little bit because I wasn't quite sure if the zone was going to hold up, but It did. So when I see my setups, I can't hesitate. I have to take exactly what I see and follow my trading plan correctly, win, lose, or draw. So after we touch the bottom of the zone, we come back up, retest the top of the zone, make a double top, we pull back down and create a lower high. And that's actually where I took trade 13, where I went long in expectation of the zone's bottom holding up, because I'm thinking that if we held up right here and right here, then more than likely we'll probably hold up again at these levels. But what I realized after the fact was that this wasn't really the strongest support level for the bottom of the zone if you really want to think about it, because the only thing we really have is this wick and this wick. So we have two touches of the zone. That doesn't really make it the strongest zone, and it gives it the potential chance to be broken through more easily than not. So that's what happened on trade 13. I actually went long against a lower high, and as we can see, once that lower high got established, it took prices back down to the bottom of the zone where I caught trade 14. Let's zoom in a little bit so we can see. So that's actually where I was able to catch trade 14. Now trade 14 had the same execution problems as 12A over here. I pretty much took the same short from the same price. Only difference on 14 was that not only was my entry bad, but my exit was bad also. So I should have been going short as soon as prices broke back into the zone. I left maybe 7 to 8 points on the table right there. I caught it at 14, and then look at where I got out. Not at the bottom of the zone, but when prices hit the bottom of the zone and start moving back. Now that's a problem that I've been having, because I've seen prices hit the zone a lot of times this past week, and I'll take profit when they bounce back instead of just taking profit immediately at the zone. I don't need to wait for a bounce back, because really what I'm trying to do is wait and see if prices will continue pushing past the zone. So really that's greed, because I'm trying to get more than what the market is offering. Now if I just take what's there, then I'll do very well. I would have done well on trades 12A and 14, which would have made up for some of these losses that I took on these other trades. So just being able to not only have winning trades, but to maximize your winning trades and trade your winning trades properly. That's my goal, and that's the lesson that I learned from that trade right there on 14 and 12A. Now on 15, I was revenge trading. I revenge traded here in an attempt to make back those 9 points, which was not the right move. When prices come back down and hit the bottom of the zone, the move is over. You're not really going to catch a second move off of a pullback where prices bounce off the bottom, come back, retest these highs, and then come back to the bottom again. It's just probably not going to happen like that after you just had two touches right here. So that was just a bad mistake on my part. That was just a bad trade, 100%. Now if we move on to trade 16, so after 15 we see prices come back up to the midpoint of the zone, and then they pull back all the way back down to the lowest portion of this zone right here, which led me to trade number 16. Now on trade 16 I had the right idea, but I just pretty much I got stopped out. This is one of those scenarios where volatility comes into the market, and even though you had a good trade, you still have to take a loss on it, which is okay. Sometimes the market does that, and that's the way that it goes. But my problem was when prices spiked back through my entry price that I had from trade 16, I should have went long. As prices came back into the zone, I should have went long immediately down here. I wasn't able to do that, but I was able to go long at 17 once I realized that, okay, prices are clearly back in the zone. I need to be long and hold prices up to either the midpoint or all the way back up to the top of the zone. Now trade 17, my idea was right, but I didn't hold the trade, so I missed out on all of those points, either taking it back to the midpoint or back to the top. All of those points were left on the table, so that's just bad execution as a trader by me. And then on trades 18 and 19, it was a very similar situation to what we had at trade 6 and 7, where I'm going short at the top of the zone, but I just didn't hold my trade and give it room to run, because I had took so many losses up to that point. I was really risk averse, and I wasn't willing to take any losses or accept any risk on my best setups. And you're not willing to accept the risk on your trades, it's going to be a lot harder to stay in them, because more than likely the market is going to take you back and forth before it fills your order at your target price, which happened right here. If you look at the entry, we could also talk about that too. The entry is not necessarily the best, because I shorted not at the exact top of the zone, but further away when prices were moving away from the top, when really I should just have my order up here at the level of resistance if I know that that's going to be the top of the zone. Because look at where I got stopped out on this trade. Let's zoom in a little bit. This was my entry where I went short. I got stopped out right here at the blue triangle. Notice how my stop price is right at the top of the zone. So anytime you have a scenario in the market where you look back and say, wow, if I would have just took my entry from where I placed my stop at, I would have been correct. That means that you're right about the idea, but bad about the entry and the entry price. So that's on me right there. I knew better, but I chose to still do what I wasn't supposed to do, and that's something I can clean up. I think overall in the afternoon session I had so many opportunities to do the right thing, but I don't know what I was thinking right here. I don't really think I came in with the right mindset. I was a little bit too hyped up from the morning session after having 5 good trades that all worked for me. I came in a little bit cocky and I paid for it. So once again, that goes back to a lesson that we talked about on another stream earlier this week, which is focus and attention. I need to be 100% focused on every trade that I take. Whether I'm down by 300 or up by 300, it doesn't matter. I need to have the same amount of focus in every session for every trade that I take. And I believe that I should be good, man. I believe in my trend identification skills. I think they're pretty solid. It's just about taking the skills that I have and applying them in the markets. So that's going to be my focus for day number 17. I appreciate you guys for tuning in with me. I'll see you on May 3rd at 9:30 a.m. sharp. And until then, take it easy.